For more stock news updates, remember to press the like button and subscribe. With that being said, let's get straight into the video. Palantir Technologies has made an impressive run so far this year, delivering double-digit gains even while many other technology stocks have faltered. While others in the sector have stumbled due to a combination of macroeconomic pressures and investor uncertainty, Palantir has continued to build on its momentum. Its rising valuation reflects growing investor confidence in its long-term potential, particularly in the field of artificial intelligence. As a result, many on Wall Street are now debating whether the company can continue its upward trend or if the stock is on the verge of a pullback. Some analysts believe Palantir's share price could drop by nearly 30% based on current valuation levels. However, a deeper dive into the company's fundamentals suggests that a dramatic drop may not be in the cards. Yes, the stock is trading at a high multiple, roughly 237 times its projected future earnings, which puts it well above many of its peers. But this isn't some sudden change in pricing. Palantir has consistently traded at elevated valuation levels for years, and yet that has not stopped it from moving higher. Investors seem to be making a long-term bet, not just based on short-term earnings, but on the continued development and deployment of advanced technologies that are reshaping entire industries. Part of the reason Palantir has maintained this momentum is the unique nature of its business model and the strength of its offerings. Unlike many other tech companies that build generic software tools, Palantir has created a platform specifically designed to help organizations make smarter decisions using data. That core capability has only become more powerful with the integration of artificial intelligence. In recent years, the company launched its Artificial Intelligence Platform, or AIP, which allows clients to harness advanced machine learning models and decision-making frameworks in real time. This upgrade has fundamentally enhanced what Palantir's software can do, and as a result, demand has surged. This new layer of functionality is not just attracting interest, it's driving real-world adoption across multiple industries. Government agencies are using AIP to improve outcomes on the battlefield by enabling faster, more accurate decision-making. Hospitals are using the platform to streamline operations, allocate resources, and respond more efficiently to patient needs. In the commercial world, companies are beginning to see the benefits too. For example, Wendy's, a major fast food chain, is applying AIP to better manage its supply chain operations, a move that could significantly reduce waste, cut costs, and improve overall efficiency. Historically, Palantir generated the bulk of its revenue from government contracts. That business remains strong. But what's truly exciting is how the commercial side of the business is catching up. In recent quarters, commercial revenue has accelerated dramatically, proving that AIP has broad appeal beyond government sectors. In the most recent quarter, revenue from the United States government rose by 45%, while United States commercial revenue jumped by 71%. The quarter before that showed similar growth, with government revenue increasing by 45% and commercial revenue by 64%. These figures show that the company is firing on all cylinders, with both key segments producing double-digit growth quarter after quarter. The result of this strong performance has been a massive surge in the stock price. Last year, Palantir shares skyrocketed by 340%. This year, the stock has continued to climb, adding over 80% so far. This type of consistent, high-octane performance is rare and speaks to the strength of the company's business strategy and product-market fit. Now, with all this growth, some investors are understandably cautious. After such a strong run, could the stock be due for a correction? While a brief pause or small pullback is always possible, the underlying demand for Palantir's software solutions shows no signs of slowing. In fact, even during periods of broader market uncertainty and volatility, the company has continued to see elevated demand. That kind of resilience suggests that Palantir is offering something essential to its clients, not a nice-to-have product, but a must-have system for navigating complex environments. This level of sustained interest bodes well for future revenue, and as that revenue grows, it could continue attracting long-term investors who are less focused on immediate profitability and more interested in future growth. It's also worth remembering that many of Palantir's backers, particularly those in the tech space, are focused on vision and innovation rather than valuation multiples. They see the company's technology, its leadership in artificial intelligence, and its ability to scale across sectors as powerful competitive advantages that are not easily replicated. One metric that further validates Palantir's ability to balance growth and profitability is its Rule of 40 score, which stands at 83%. This figure is a composite measure that adds revenue growth to profit margin. A score above 40% is generally considered very strong, suggesting that a company is growing rapidly without sacrificing financial discipline. In Palantir's case, achieving more than double that threshold indicates that it is not just expanding, it's doing so with a healthy bottom line. And when you look at the broader landscape, there's even more reason to be optimistic. Analysts expect the artificial intelligence market to grow at a double-digit compound annual rate and eventually exceed $2 trillion in size. That kind of market expansion opens up massive opportunities for companies like Palantir that offer user-friendly, scalable, and impactful AI tools. As more businesses rush to implement AI to stay competitive, Palantir's technology allows companies to plug AI directly into their operations without needing huge internal tech teams or massive custom development work. This lowers the barrier to adoption and accelerates the value companies get from the technology. In an environment where speed and efficiency matter more than ever, that is a massive edge. So where does that leave us? While it's always important to approach hot stocks with caution, especially after such rapid gains, the bigger picture for Palantir remains compelling. The company is uniquely positioned at the intersection of data analytics and artificial intelligence, two of the most transformative trends in technology today. It is growing both its government and commercial businesses at a healthy clip, introducing cutting-edge tools that clients find genuinely useful, and generating impressive financial metrics that show a strong foundation for continued success. Even if the stock sees short-term fluctuations, the long-term prospects are bright. If you're a growth-focused investor who believes in the future of artificial intelligence and data-driven decision-making, Palantir offers a compelling case. And buying the stock at today's price could still lead to solid returns down the road. In the end, Palantir Technologies has delivered strong double-digit gains this year, fueled by rising demand for its artificial intelligence platform across both government and commercial sectors. Despite concerns about its high valuation, the company continues to grow rapidly, with recent quarters showing significant revenue increases, up 71% in United States commercial and 45% in United States government segments. Its software is being used in areas ranging from military decision-making to hospital resource management and corporate supply chains. With a Rule of 40 score of 83% and expectations that the artificial intelligence market will surpass $2 trillion, Palantir appears well-positioned for long-term success, even if short-term volatility persists. For more stock news updates, remember to press the like button and subscribe. With that being said, I will see you in the next video.